I think cryptocurrencies give us the best risk-adjusted investment opportunity we may ever see, but I would never put all my money in. In this video, I'm going to explain what I did with the profits I've taken out so far and what my ultimate endgame is. So stay tuned. All right, welcome back. So I'm going to talk about what we're doing with profits, okay? And now this doesn't just apply to crypto profits. Maybe you've never invested into cryptocurrencies. Maybe you've never gotten profits from cryptocurrencies. This has to do with any profits that we make. And so I want to give you the framework that you can use to think about other types of investments and that you can build on for the rest of your life. Now, I'm talking about cryptocurrency profits right now because so far they've been the best investment I've ever seen. They've gone up more than any other investment I've ever seen. And I believe, as I said in the opening, that I believe they still give us the best risk-adjusted return that we'll probably ever see. Now, when I say risk-adjusted return, what does that mean? All right, so what I mean is that they're still risky, all right? So they're not proven, they don't have 5,000 years of history like gold. They're not tangible with like real renters in there like a real estate property. It's not shares of a real company like Facebook. Cryptocurrencies are speculative. They're brand new, they're technology. Now, Bitcoin's been around for 10 years. It's obviously a lot safer than most of these little altcoins that we have, but for the most part, they're all speculative. And so when I say risk adjusted, when we invest into more risky things, we have to adjust the amount of risk that we put into them. So I've been doing like pre-IPO deals for many years, and those are super risky. And so I put little bits of money in because there's huge asymmetric returns, similar like cryptocurrencies, but something bigger and safer like a bond or something like that, you could put more money in, but you don't, because it's not as risky, but you don't have as much chance of an upside. So that's what I mean. All right, so let's get right into it. So what did I do with my crypto profits, and what am I going to continue to do with my profits? So first of all, the first thing is you got to take them, right? So that's the first thing. Did you take profits? So the first thing is when the cryptocurrencies go up, or when they did go up, did you take profits out? When they do go up, will you take profits out? You know, did you see on paper you were a millionaire, but then you never took them? All right, I've seen, you know, in the last couple of videos, I've got a lot of comments from you guys where it's like, hey, I've learned my lesson. I think it was the video I talked about my biggest financial mistakes. I'll put a link to it up here. And a lot of people said that their biggest financial mistake was the cryptocurrency market, and they didn't take profits. But they all said, but I'm going to do better next time. The next time I'm going to do better, but I asked, how? Why? What's going to make you do better? And they just said, oh, I'm going to be able to sell at the top next time. But how are you going to know it's the top? So we need to have a system for that. We'll talk about that. But the first thing is, in order to do something with your profits, you have to take them. But how? Right? So that's the how. How do we take profits? And the thing is that we have to have a plan. We have to be able to do this systematically. It has to happen automatically. And I've said it before, but really, we always need to know when we're going to sell before we buy. But I learned in real estate that you make your money when you buy, not when you sell. So that means when I buy that property, I already have a plan of exactly how I'm going to add value to that home, what it's going to be worth, and then how I can sell it. And no different with like I said, I was investing into pre-IPO stuff, I still do, and that's a lot more risky, but I have a plan. So typically when it goes up by X amount, I'll sell, take money off the table, I'll leave some in for the upside, depending on what it looks like at that time. Cryptocurrencies were a lot of the same way. So you put some money in, as soon as it goes up, you take some money off the table, you let it rise, or let it ride, I should say. But we have this plan, but really, the bigger plan and the way that I was able to really make out ahead was because of this this automatic plan that I have called rebalancing. And so what happens is, I had to learn the hard way, but back in the mid 2000s, I've told you my story, I lost it all because I was all in on real estate, and I didn't have other assets at that time, and all my real estate went down. And so now I invest into lots of different asset classes. So I keep my real estate, and I keep my gold, and I'm in oil, and I do pre-IPO deals, and I have stocks, and I have cryptos, etc. And because I have these different asset classes, what happens is on a regular basis, I rebalance the portfolio. And the thing about rebalancing the portfolio is it forces you to systematically take profits. And I do this at the end of every year. And so at the end of 2017, as my profits in crypto were sky high, on January 1st, I rebalanced my portfolios like I always do, and I took profits out of crypto and I put them into the other areas, into gold, into real estate, into cash flow, etc. And so because I automatically, systematically did that, it took a lot of that thinking away from me. And so what happens is, as humans, we're horrible investors as humans, because we're motivated by two things. And that's one, we want to run towards pleasure. So when prices are going up, everybody wants to rush in. And then we want to run away from pain. So when prices are going down, we want to get out. But as investors, it's supposed to be the opposite. So when prices are going up, we're supposed to be selling. And when prices are going down, we're supposed to be buying. But it's human nature, and it's really, really hard to go against that. And that's why you have to take the human nature out, and you got to put a system, an automatic system in place to do that. Now, what I'm doing with my profits, like I talked about, is most of those profits that I took out went into cash flow. And I've talked about cash flow a lot. If you've been watching my videos on the channel for a while, you know I've talked about cash flow because it is my end game. That's my goal. That's my goal. All the profits that I make, all the money that I make in my businesses, some go into growth opportunities. So crypto, obviously, gold mining stocks, some cannabis stocks, a lot of other equity type stocks. So I'm looking for growth in those, but then I take those profits out and I'm always putting it into cash flow whenever I can. Because my goal is to get my cash flow, or my goal was, I should say, to get my cash flow above my living expenses. All right, that's the goal, and I always recommend that should be the goal for everybody. Always think about that, and even though it may seem overwhelming, it may seem too daunting to even start doing, just start taking action on that. So just start trying to get a little bit of cash flow at a time, and it eventually becomes kind of addictive. It's like a game, and you want to keep growing it, and eventually start making good progress. But just think about, what does it take for you to live on a monthly basis? If you add up your rent or your mortgage payment, your car payment, your insurance, your food bills, etc., what does it cost you to live on a monthly basis? All right, that's the first step. Second step is, how much income do I need now to either equal that or exceed that? And so that's my end game, to do that. Once you have the income to exceed your expenses, you're out of the game, you're out of the rat race. For me, that's been real estate. Now I do other types of income plays, and some of that's like private businesses, equity, a little bit of like REITs and some big commercial project pieces that I'm in, but most of it's like wholly owned real estate, and I'll kind of give you more about that. But the reason why I love real estate more than anything is two main reasons. One, real estate's tangible. And I know it kind of goes against what I talk about with Bitcoin all the time, because Bitcoin's digital and I still believe it holds massive value. But unlike a stock, or unlike a bond, or unlike a REIT or something like that, real estate's there. Like, I can drive it, I can look at it, and somebody's there, living there, paying for it, right? Like living, there's a use case, there's a need for it. So I really like that, right? And it's not going away. Like, if a hurricane or a tornado did take it away, I mean, I'd have insurance, but I mean, it's not going anywhere. It's there. And also, I have control over that. So again, back to the stocks and the bonds and the REITs and all those things, a lot of that's out of my control. I don't know what's happening with the stock market. I don't know what those companies are going to do. I don't know if they're going to hit their profit margins or whatever next year. I don't know. So all that's out of my control. I mean, all I can do is I can buy and sell. But with real estate, I can control it. So I can clean it up. I can fix it up. I could do a better job marketing it. I could hire a new property manager. There's all these things that I could do. I could add on to it, right? So there's all these things that I can do to personally control that property, and I like that. Not because I'm a control freak, but I believe that, I spend a lot of time and attention on the things that I own to maximize them, to optimize them. And so if I have the opportunity to put some of my skill into that, I believe I can do better than most. So I like real estate because it's tangible and I can control it. But there's also some other really good reasons, and the one and two are kind of the same. I mean, so I can depreciate them, and really that comes into tax advantages. There's all kinds of tax advantages for investing into real estate. Now, it depends on if you can be considered a full-time real estate person or not, and it depends on what your taxable income is. So there's some consideration. Talk to your tax professional about it. The old saying, a penny saved is a penny earned, right? So like, imagine your single biggest expense is taxes. That's where the majority of your money goes to taxes. So if you can reduce that tax liability, you're making more money. So with real estate, that's exactly what we can do. Through depreciation and other tax advantages that we have, we can limit our tax exposure, and that makes us more money. The other thing that I love about real estate is it's scalable. All right, I don't really like to have to be stuck down, right? I don't freedom is one of my core values, and so I want to be in scalable businesses, and that's exactly what real estate gives me. One, I have property managers in place that run those properties, so I have properties all around the country and I don't have to go to them. So it's scalable as far as my time, but it's also scalable because of OPM, or other people's money. So that means I can leverage it using debt, what I would consider good debt, not like a credit card, but I can use debt to scale my real estate portfolio and make money on other people's money. Now, if you like that, give me a thumbs up on that. Who doesn't like making money with other people's money? So give me a thumbs up on that. But those are the reasons why I really, really like real estate. Now, there's a few different ways that you can play real estate. And up on this screen, I kind of have this chart here. So on the top left is like more expensive, and on the top is more convenient, the bottom is less convenient. The left is more expensive, the right is less expensive, right? So I've kind of broken these down. So we have 4 main ways that I've talked about investing into real estate right here. And so at the top left, it's more expensive but more convenient is fractional ownership. All right, so this is where you could buy into like large apartment buildings. Maybe these are 50 units, 80 units, 100 unit apartment buildings. Maybe it's 10 million, 15, 20 million dollars, but you can buy just a small fractional ownership and you could make 8 to 10% on your money, and they'll hold the property for a couple years, they'll sell it, you'll have a capital gains event and so forth. And that's a really good way to play real estate, but without having to, get the loans and buy it and own it and manage it and do all that work. And you can be involved in some really big projects for just a little bit of money. So that's one way that you can do it with just a little bit of money. Now, at the bottom left, I have wholly owned. So there's where you'd buy your single families, your duplexes, your fourplexes, etc. And you can buy them, you can control them, you can manage them, you can rent them, etc. Now, you don't have to have all the money in the world. There's properties that I see every single day that are $25,000 that you can buy in the Midwest, and you can buy those for 10% down, a couple $1,000, and you can start making rental income on those. You can obviously go all the way up to as much as you want to spend on real estate, but you have wholly owned, fractionally owned. And then over on the more convenient, less expensive side, we have REITs. So REITs are basically like ETFs. They're like stocks, basically. You can buy them through your stockbroker account. And these are like funds that are invested into real estate. And by buying into the REIT, you're basically buying fractions of real estate. And so you can buy that right through your brokerage account, and you can get exposure to real estate. You can start making income from real estate right from your brokerage account with just a little bit of money. And then on the bottom right, I have tokenized real estate. And this is something I'm super excited about. There's a company that I've been working with. We're actually tokenizing rental properties. And so literally for like $70, you could own a token that represents ownership of a rental property, and you can earn rental revenue, rental income on that token. So those are 4 different ways that you can play real estate, put your money into the income, the cash flow income piece of an asset allocation strategy. All right, it's again, something I really recommend. I've moved a big portion of my assets into cash flow. I used to have more of it in growth, but as my portfolio has grown, I've moved more and more and more of it over into cash flow. And I recommend that you play that same game. If you want to know all the different areas that I think you should be putting your money, there's really only 4. I don't try and make it overcomplicated like these professional money managers do. There's like 4 places. If you haven't downloaded the guide yet, I've had it up on a couple of videos. There's a link down below. It's free. Check that out. And this is where I like to put the money right now for 2019 and 20. Again, we need to be quick and be ready to move. If something changes, we'll move. But right now, this is where I like to put it. I keep it simple. So check out the guide in the link down below. If you like this video, give me a thumbs up on it. If you don't like it, give me a thumbs down. Either way, let me know. I love to hear your feedback. I answer all your comments and questions down below. So make sure you leave those for me. And that's it. To your success. I'm out.